Wall Street's predicting a 25% or more crash in housing prices in some markets. Hey, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's January 27th. Before we jump into that headline, YouTube algorithm, please like, subscribe, ring the notification bell. And if you got any topics you want me to cover, any questions, throw them in the comments below. I appreciate it. Looking at the Connecticut real estate market really quickly. 3,822 homes active on the market today. That's single family, multifamily, and condos combined for the state of Connecticut. 79 down from last week. And we got 79 coming soon. About little less than 2,000 closed so far in January. Got a couple more days to go. For reference, December was 3,342. And it's down a little bit, but that makes sense because you have so little for sale. It makes sense that you're going to see fewer sales. So talking about the New York Post article here, Goldman Sachs is saying 4 cities will suffer a 2008 crash in home values. What are they talking about? San Jose, Austin, Phoenix, and San Diego looking for 25% or more drop. All those areas have seen meteoric rises in home prices. Connecticut went up, they went way up. So there's a bit of a reversion to the mean thing going on. And especially the California cities, demand's down across the country because interest rates are up higher. And that's what raised interest rates do, is drive demand down. So you got people in California moving out, putting houses on the market, and there's less demand, more houses on the market. It's a supply and demand thing on top of a reversion to the mean. Prices coming down, it does make sense. Let's look at some predictions that they have in that same article for some other areas. New York City down 0.3%. Chicago down 1.8%. Baltimore up 0.5%. And Miami up 0.8%. Those are 2003 estimates. So Connecticut, I predicted in my 2023 predictions video that it was going to be up 2-3% for the year, and I still hold to that prediction. And we are seeing pretty flat prices right now. So we'll see how that plays out. The other one is Reuters article. New home sales are up for the 3rd month, so that's good. We're seeing new home sales recover because they dropped off dramatically at the end of last year. It's around 615,000 versus 600,000, so that's a good thing, right? The other thing that this article really brought to my attention was, I know before I got into real estate, I wasn't even cognizant of the difference between new home sales, existing home sales, total home sales. So you'd see this article, new home sales are up for the 3rd month, and oh, that's great. So home sales are up. No, only new home sales are up. And what is a new home? A new home is a property that's built by a builder. No one's owned it yet. No one's lived in it yet. And they sell it. The builder sells it to a homeowner. That's a new home. Pretty obvious. Existing homes, I bet you can figure this one out. It's a house that an owner already owns, and they sell it to a different owner. It exists. They're selling it. It's not a new construction house. Now let's talk about scope, because this is important. New homes, about 600,000 this year. Existing homes for sale, that will be sold rather, 5 million-ish. Right? So you're talking 5.6 million total. The vast majority are existing homes. So when you see new home sales are up, it's a small portion, but it's an important portion for the very simple reason that we are 6 million homes behind. If you look back to 2008 and before that, we were building at a certain level in the U.S. on average. Dropped off dramatically because there was no one buying homes. Some areas it's recovered, but in other areas, especially like Connecticut, we're at like 30 to 40% of what we were pre-2008. And maybe those pre-2008 numbers were too high, but 30-40% of it is too low. So we have a big gap in the number of houses that are available, and that's a big part of the reason why we're continuing to see prices go up. It's a supply and demand play. Let's talk about the primary mortgage market survey from Freddie Mac, 6.13, just a whisker below that 6.15 we were at last week. We have the next Fed meeting coming up soon. We'll see how they play it. The markets think that the Fed is going to go a little bit more dovish. They're not going to raise interest rates as much, or maybe they're going to start signaling they're going to slow down interest rates or even stop them and start bringing them back down. I don't think we're going to see a pivot yet, but it's something that's out there. We'll see how that plays out. Just to keep everything real, from a recency bias perspective, 2.5%, 3%, man, those are great rates. Now we're at over 6%. It's terrible. Well, if you plot it next to the last 50 years, maybe it's not so bad. Just something to think about. I've got clients who told me in 2018, 2019 that prices were too high and they were going to wait for them to come back down. It didn't work out. I don't see interest rates coming down too much more. But I think I said 5.5% by the end of the year. And home prices are going to be flat to up this year, and then they're going to keep going. So just if you're ready to buy, now's the time to buy. You got to look at what your needs are and not just try to time the market, because you're never going to be successful at that. I want to finish off with a little tip here. Do you have oil heat? If you do, this is for you. Your tank's most likely in the basement or the garage. If it's not, then you got to find out where it is. Make sure it's not in the ground. We'll talk about that at another time. If you have questions, let me know. There's going to be a copper tube running from the tank to the burner. Is that buried in concrete? Is it just bare copper? If it is, a lot of risk of an oil leak. Make sure that the next time you get your oil burner serviced, you ask them to change that out to a coated copper pipe. It's usually yellow or orange or red, I've seen. It just protects the copper from being degraded by the concrete. So if you have what's on the bottom left, you need to get what's on the bottom right. Your oil company that services your burner can take care of that. And if you don't know this, oil burners need to be serviced every year consistently. It'll help with efficiency, and it'll also just save you from having a problem if the thing fails on you. Anyway, hopefully this is valuable to you. Look forward to talking to you again soon. Have a great weekend. Talk soon.